Hey NJ, thanks for that. Can you hear me? Just to check. Oh, I'm not really visible. I'm going to grab a cup of tea and then come back. And the purpose of this is just a general discussion about trading news, how my setup actually helps me, how I've used this setup for over 20 years. Hasn't really changed very much. I really like Sierra, as you can see. Nice and cheap. Does its job. Cool. Yes, the tab on the tab on the I can get rid of it. I can get rid of it. You just go into your settings. There it is, settings. And what do you hit? Oh no. I guess you can't get rid of it. No, that's no. That is the minimal. Yeah, setting. Yeah, you can't get rid of the top bit. That's annoying. It is annoying. It is annoying. I've just got used to it actually, and it does drive me insane. You don't get that on a TT or CQG. CQG got pretty good ladders as well. Other ladders that I like are what they called Jigsaw, but the actual platform itself, it just can't keep up when the markets get busy. Really pretty poor, I would say. I tried it out for a while. I was really excited to see it because the flow looked really clean. But yeah, Jigsaw just couldn't cope when the markets got really busy. The only products I can really depend on is Sierra Chart. I think Quant got some decent ladders. At some point, I might have a look at those, not to change, but just for me to scout to see what's out there. But for news trading, having a lot of ladders up on screen is really useful. Hi Yanis, Rich. You know my first name. Do I know you, Rich? You even spelt it correctly. Wow. Thanks, Rich. Anyway, so came back late from travels. It was a holiday in the US and the UK. Hang on, I can't see anybody. I'm gonna have to reset this camera. Hang on, give me a second. I'm gonna reset this camera. Because it does this crazy autofocus thing. There we go. Yeah, I'm actually a proper pajama trader. I am in my pajamas right now. I won't stand up to show you, but I am. I was traveling late last night. Got in, and I've had a lot of things to sort out. But I have been at my desk. But mainly, I've just been doing. Cause I haven't managed to do my research and prep over the weekend, so it's just kind of getting into it. On Tuesday, I'm late. I'm not really ready for it. Ready in a way that I'd like to be. Right, why have I done this video? And thanks all for joining, and hopefully you'll learn something. So I've traded for 20 odd years, 24, 25 years, and one of the best bits of info to trade off is headlines that aren't priced in. So some kind of news information, like I'll give you an example. Last week, Thursday, I think it was, we had Trump talking about 50% tariffs. That was something that was, in addition to the continual negotiations that we're having between the EU and the US, and then Trump just blurts out, we're not going anywhere, I'm going to just stick a 50% tariff. That is an example of something that's not really priced in because the market wasn't expecting it. And you've got this big flow, we've got this big liquidation down, where if you were quick enough, you could have got some really good asymmetric risk there. You could have hit the headline, and it was just one-way traffic after that. Anyway, then going into the reopen, this was on Sunday reopen, which I'm always looking at, especially since Trump's come back into power. You got the opposite. You basically got him boarding a plane. He was answering a few questions, and then he basically said, he's going to hold off on the 50% tariffs, which, is pretty typical of Trump and how it works. But the market basically redoes a lot of what it did on the Thursday when we first got the headlines. And again, if you're sitting there and you're aware that this guy's going to start talking, you've got to be sitting there with your fingers on the button, ready to act. Okay. When I say you got to, you don't have to do anything. It's just the way I trade. On the Sunday, I was in Paris. I didn't really have my setup, but I still managed to get on that just a little bit. I didn't manage to get hold of the ES to the upside. I just didn't get filled by just a couple of points. Really unlucky. Bit painful, but I managed to sell some gold. But the point is that he's talking, and he's putting some new information into the market that needs to be repriced pretty quickly, and you can and then you can take advantage of it. But today we had some headlines again from Trump. So I'm just giving you examples of like the last few days where we've had some really big moves off Trump headlines, and well done, Rich. Hopefully I helped you past your eval. Yes, well done. The magic number 53002. Cool. Okay, so today we just had a headline just now. Crude was trading 61s roughly, and then a headline came in that he was going to put on some sanctions potentially on Russia. Now, what makes trading news difficult is that it's not as easy as just hitting and lifting headlines. You really need to understand two things. You understand positioning. Where is the market position? So as we just lifted off 61s into the open on the headline, the market was overly short, or predominantly short-term traders last hour had just been selling it into these 61s, and then the headline comes in and talks about tariffs on Russia. So you've got to understand the positioning. It really makes a difference how a trade works. Also, you need to understand what kind of trading has been going on into that headline. So it was quite obvious that there was a seller in Crude. I'll just kind of show you what was going on. So this was the price action into the headline. There it goes. It's going lower, going lower, going lower. Very, very tight price action. You don't want to really step in the way of that. And then you got the headline, and it's bang on this, nice round number, nice psychological level, 61s. These are always good areas to look out for. I've always got them highlighted on my chart. And then you got this big candle straight up. But, you've got to ask yourself, well, why didn't he go any higher? He's going to put sanctions. Well, one, we already know that he's thinking about putting sanctions. He's mentioned it, okay? This is not really new info. This is just basically short-term traders just panicking and then lifting. So you can understand, like what's been said before, what's the context before. So you need to understand not only market context and positioning, but you really need to understand the news flow context as well, and where we are and what's been said most recently, and basically what's the general picture. So it's really important to understand both the technical and the macro. Volume's a bit low. In what, mate? Be specific. I trade 20 different things. Anyway, the point of this is, guys, is I'm talking about news, and if you guys got any questions about news specifically. So you got to understand the context that you're trading in, both technically and but also the news context that you're trading in. So if you don't understand those two things, it's really hard to. Yeah, oil is one time framing down at the moment. Yeah, really seen some strong selling in there for the last couple of hours, since the close of Singapore actually. For any of you who trade oil, I would really recommend that you pay attention to things like London settlement, Singapore settlement, and of course the US settlement. Those are the three big settlements around the world, and you know, being an actual physical commodity, it really does make a difference. So the move lower today coincides with the end of the Singaporean session and the overlap into UK. UK is an ICE. Yeah, London's probably one of the biggest markets for oil. So yeah. All right. So yeah. The other thing that really helps with trading news is just having multiple ladders. I don't need to see a headline to know that something's gone off. Headline wise, I just need to see the reaction of one of these ladders. If it starts flying off screen, I'm going to, you know, what's Bitcoin? If things start flying off screen, that just gives me a signal that something's happened. There's a lot of floor traders who have made careers about literally just trading the blip, which is really hard. Once you're in a trade, whether it's blip or you actually trade the scene of the crime, there's lots of ways to trade it, and I'm not going to go into those too much today. You really want to be looking for your out pretty quickly, because these things can get retraced pretty quickly. This is a good example from today. You can see there's the volume coming in from the news. It lifts up, but it flies straight through. But we're pretty balanced. You know, balanced. Why are we balanced? Because we've got lots of overlapping. This is move down, move up, move down, move up, move up, down. Balance. The market is just basically undecided. And what does it do? It just slices up to the top of the value area high of the day's balance, and then just comes back down again. So you really don't want to be too greedy with this, with news, especially with a big chunk of your position. You don't want to be too greedy. You want to be taking big chunks of it off where people might be profit taking. So in this case, given the fact that we're balanced, there's no real news that has come out. It's just basically short-term panic. You want to be trying to get out of your positions pretty quickly. Maybe you want to try and hold a residual, but then if you start seeing it come back, scene of the crime, or even, you know, 50% mid, something like that, you want to be thinking about getting out. Microphone volume not good. Do I need to talk into this like this? Maybe. Is that better? Let me know if that's better. Just waiting to see if what you guys say. I just noticed that there's a bit of a lag. All right, okay, so hopefully that's a bit clearer. You guys can hear. Let me see if I can increase the output on the mic. Maybe that's better as well. Hopefully. I've noticed that if I turn the output high, it really does echo a lot. So if you guys are listening to an echo, that's not good either. Let's see if we can get rid of the echo. Okay, hopefully that's better. So anyone got any questions on trading news? It's not something that you can really go over in 5 minutes, but I know a lot of people just, you know, they're fixated on technical trading, but, you know, read Market Wizards, read the new book that's come out from Axia, Traders of Our Time. News is a huge part of what they do. You're really naive to think that headlines don't really affect what you're trading. Sure, it all looks great on a technical picture, and a lot of times you get technical trades that set up with some macro. That's my squawk.
With the 50% tariff allotment on the EU, especially since they were slow walking our negotiations with them.
So I'm just listening out to that headline now.
Set a deal for trade into the US. If we are unable to make a deal or are untreated fairly. I have just been informed that the EU has called to quickly establish meeting dates. This is a positive event. I hope that they will finally, like my same demand.
Okay, so that's Trump basically saying he's satisfied that we're making some kind of progress on this. That should be positive for equities, but
have just been informed that the EU has called to quickly established meeting dates.
So you should see some kind of a pop-up. I'm not really interested in trading that. It's nothing that we don't really know. I think the market thinks the same way as well. The whole point of having ladders up here like this, having the tickers, is that you're quick to get your orders in and out. If you haven't traded off ladders, that's why we use them. Most professional prop houses, they use ladders, but you need to really have the full level 2 data.
Trump says, I hope that the EU will open up for trade talks with the US.
Rich, you've failed 170 evals. You've stopped trading for 2 months and feel much better now. Yeah, you should, because you've got an addiction. You've got a problem. Yeah, volume's a bit low. Yeah, that's right. I look at RVOL here. This tells me here whether or not there's lots of activity going off, and there isn't really. Doesn't really want to make me trade. You can see those comments that just come in with Trump just now, and no volume's really coming in. And we are 2 minutes to the open. I am not trading. I'm not trading because I'm tired. I've not done my prep properly. If there's a headline, I will hit it probably. If I'm much more well read up on the macro picture. But yeah, Rich and anyone else who's got a problem with these evals, they're good. I mean, trading evals is great. It's a great way to get back into trading if you don't have the funds to trade. But the problem is that people want to pass those funded. Yeah, Trump take bomb. People want to. People basically want to pass and get funded as quickly as possible. So they end up with very, very poor trading habits trying to get funded. Once they get funded, they take it very personal when they end up going down on account. Most people blow up their evals within a few weeks of actually getting funded. As soon as the account starts going negative, they're chasing to get flat, and this is just a recipe for disaster. That's not how professional traders perceive trading. That's not how we go out to make our income. Taking a loss is part of trading. The old cliches. Wait for your setup. And anyway, but going back to trading those evals, you've got to treat an eval just like a real funded account. Otherwise, you get a really, you end up with a really, really bad habit of just blowing these things, getting new ones, trying again, getting new ones. It's just a self-repeating cycle. So I've actually, I think Apex, for example, they offer evals. I think they're great to practice on, but I like the idea of straight to funded. One, because you just take it a bit more seriously, and you should take it. The cost of entry is so low that's another problem. Is that people? I think the word's the gamification of trading, and that's not the right way to approach trading. It's not really a game. Yeah, they are. They're nothing. Bad. They are bad habit formers. Yeah, they really are. Trading evals really is a bad habit former. They're lethal in that respect because you're allowed to do whatever you want whenever you want, and when you cock it up, you can go and get another one for 30 quid or $30. That's really, really, really not the right way to approach things. But if you approach things the right way, don't gamify trading. Trade your setups. Learn to try to learn from your mistakes. Try to improve on your mistakes. Then that's the right way to do it. Yeah, but they are a great way of getting into trading, but they do form bad habits because people abuse them. Bit like anything, drugs are good for you, but if you abuse the drugs, they can be very, very bad for you. Not all drugs are good for you. Yeah, that's a really, really bad habit, guys. Here's some tips for people trading on evals. So people have got this idea that they've got to trade multiple accounts. Yeah, go for it. But You need to earn those multiple accounts. Don't go out and
Says data shows the economy is on the same trajectory.
don't go out and buy 20 evals if you don't know what you're doing. Go and buy 20 evals if you know what you're doing. If you've got a consistent track record. I think a better way of doing it is to take out one account, get funded on that one, and then you can add accounts to that. But just don't take things easily. Like, I think this is people see the outcome, which is basically I can make a lot of money, which is true. You can make loads of money. You've got 20 evals and they're all funded, and if you get paid out because you trade sensibly, there's a lot of rules now that that mean that if you try to gamify, there's a lot of tricks that people use, then yeah, you probably won't even get paid. So it's a waste of time and your money. So don't waste your time, don't waste your money, don't treat it like a game. Pass one eval. If you think you're getting somewhere, then maybe take out a straight to funded account as well. That's what I recommend. If any of you are thinking about doing that, then there's a link down below. Very welcome to use it, much appreciated. But the idea that you can take 20 funded accounts, get funded, and then the week later you're driving a Lambo or you're paying your bills or whatever it is that you need to do. You need to get away from this idea of needs. Hey, should we have a look at what do you guys want to talk about? I mean, I'm not going to stay on for too long. I'm done for the day. I got long off that headline, that oil headline, and I'm not planning on trading anymore. I'm going to do some more prep. Have you guys all done your prep? I can do prep with you guys if you want.
Says people are being patient.
Pretty boring.
Investment decisions.
Any other questions, guys? In ES, if you're trading ES.
UK ambassador to the US, Mandelson, speaking in Washington, says the UK is not rejoining.
NJ, I can't remember who said it, but put as much into your savings account as you pay for your evals. Isn't that true? I mean, I've heard some horrendous stories, like 170 failed evals, 7 funded accounts. First of all, that ratio is pretty poor. Even if you flipped a coin, you probably could pass those accounts. So you've got to maybe look at yourself, maybe look at what's making you blow those accounts up. How are you feeling on the, at the moment that you're blowing those accounts? Is it, fear of losing out? Is it nonchalance of trading these evals? The fact that you can probably get back in again for a small fee. It's not really, it's not going to hurt you too much. These are some things you've got to look at. I can't really help you off this YouTube video. It's not the purpose of it, but definitely, I don't think you're ready for trading. On the floor, we started trading and we had pretty tight risk parameters. You could you had access to the trading floor, you had access to capital to trade, but you had a risk manager, and also you had your peers. And if you traded poorly, you'd be put to bed pretty quickly. I'll let the squawk just finish talking. We're just coming up to this really important area, which is basically the overnight low and yesterday's lows. Yesterday was a holiday, remember? So opening range trade, yeah. Straight out the blocks, took out the low and then straight off lower, yeah. Anyway, so going back to what it was like on the floor. On the floor, I think we were trading 4 lots to start off with, and if we were down like $200 or $300 in a day, we're done for the day. That's it. You're out. So $200 or $300 on a 4 lot. We really focused on the micro entry scalping, which is a great help for a lot of the big traders that I know, and a lot of the big traders that if you read the book Traders of Our Time, a lot of the guys on there I spent time on the floor with, they're all expert scalpers. like expert. They can read the flows off a ladder really well, footprints, but yeah, footprints are definitely secondary. The ladder is the primary source of information, the ticker.
Sentiment is affecting spending.
Parkin says there's no evidence that a drop in sentiment is affecting.
Okay, so opening range, what do I use? Here, I'll show you my chart. So there's the opening range low. There's the opening range high. I use 30 seconds. No, sorry, not 30 seconds. Pax uses 30 seconds, and that's his trade. It's not really his trade because it's been around forever. But it's yeah, I use 1 minute actually. I also use the opening swing, so the swing high and swing low. Not just the time-based range. Why would you use 3 minutes? I mean, I guess why do I use 1 minute? You can use whatever you want if it works. 30 seconds is the official opening range. What's more important is how that opening range sets.
The UK hopes that the US deal could be a model for Europe and others.
Any questions, guys? What markets is everyone looking at? Everyone's looking at ES probably, or NQ. There's so much more stuff out there. So much more stuff. No one trades RTY. RTY is great. What else is good? Oil, gold. Gold's great. Any questions, guys? Don't forget tomorrow, RTY. Yeah, RTY is really good, you know, because you can get some really good risk reward. 200 point candles is not out the question. You can definitely get a couple hundred points within the not a couple hundred ticks in the first 20-30 minutes of an open. So yeah, it's a decent one, and it respects overnight tonight. There was a level that I was looking at, which was the singles from last Wednesday. Who wants to see what that looks like? There was a trade that I was looking at. I didn't quite get filled, like just by a couple of ticks, but I don't chase. Here, I'll show you that trade idea and just show you what RTY can do. So this is my market profile. So the trade area I was looking at was that blue line there. Okay, and this is just the breakdown from the prior Wednesday. So I was offered just below that by a tick, I think, or a couple of ticks, and it just missed me by a tick or a couple of ticks. I can't remember exactly. But yeah, you got a nice rotation from that 83s down to 72s, 100 ticks within 30 minutes in an overnight session. Really, really nice. Looking at this just technically and stuff, seeing what's going on. We've seen this like reverse back up. This singles area is an important spot for me to look for, especially given the fact that we failed there a couple of times. Off the open, this is a really nice open drive from POC. That's a setup that I look for. I don't know if you guys are familiar with that. Probably not. It's my setup, but I do like a open drive from POC, overnight POC. What gave you potential clues that this is going to happen was that failure to take out that line there. That very shows weak buying. And then the immediate takeout of the pre-open swing low, which is that double TPO low there. Then we take out the singles as well. So if you were prepared to take that trade, and I tell you what, you've only seen selling in this. You've seen some good news coming to the market, but you've only seen quite a lot of selling in this market, a bit like oil as well, and yeah, sellers have definitely come into this and taking advantage. Similar actually in the SPOO. Here's SPOO. SPOO's a bit messy. I've got all my levels marked in here. Where is it? Look, there's the trade in SPU. Overnight touches that singles marker, and then it's failed. And if you've taken that trade, what's your, looking at a good 50 points worth of range on that, 45 points. We've got a lot of things coming out this week, so I'm taking it easy. I don't want to rush into things first thing for holiday. I've taken a few trades already. Quite happy about how things have gone from Sunday. Off news. And it's just kind of prepping into tomorrow. We've got FOMC minutes. We've got NVIDIA. Those are the kind of things that I'm really looking for. So trading setups is something that I pretty much do every day. But I'm having a day off today. So what are you guys doing? For those who trade ES, strong bounce off 2-week value at 68. 2-week value, let's have a look. I don't really look at the 2-week value. To be honest, I don't trade anything that's not on my chart. So if it's not on here, I'm not interested in it. So what do we bounce off down here in the lows? I don't have it. If I don't have it, I don't deem it too important. I don't look at the 2-week value. I don't see why 2 weeks important. Only that we've been kind of balancing. But as I tweeted on Thursday, I'm not here to poo-poo anyone's methods or what they use. If something works and I see it works, I'll use it. So I will look into that 2-week. What is it? 2-week value area low. So there's the 2 weeks. Let me have a look. Let me bring it in. There's my 2 weeks. Merge with prior profile. I've got it a bit higher. This is full session. You're probably looking at I'll tell you what we did bounce off though. And I wasn't paying attention. Was last week's settlement. Is that right? That's even more important than what you've said. Rich much, 50k eval, £250,000 drawdown. I don't know what to say to you. Blow it up and get a new one for 30 quid. I mean, that's not the right way to treat these things. I was thinking at one point to offer some guidance for people looking to pass evals and how I would pass them. Anyone find that interesting? I would do that for people using my coupon codes. Don't think it's too many, but for those that do. There are ways to pass these things, and it's not the way most people trade it. And it depends which firm you're with. I mean, I'm not familiar with all of them, but the ones with static drawdowns, they're a lot easier to pass than something like an Apex, which has got a trailing drawdown. Let's just have a look. I haven't marked out there for Monday, Friday, Thursday, Friday. High last. That's weird. No, that's a mistake. My chart hasn't updated. Apologies. That was not last week's settle. Of course, what? Context. For those of you that aren't familiar, I like my footprints. Let's have a look at the footprint. What can it tell us? So we came into Friday's low. I'm looking at all this for the first time, guys, so it's pretty fresh. This is yesterday's open. This is actually yesterday's open. We found a buyer. This is the buyer here. And we found the buyer right off yesterday's, where we found yesterday's buyer. That's a bit of info.
UK ambassador to the US, Mandelson, says US officials are right to look at pressuring on Putin.
Okay, we'd be interested in your methodology for passing out evals. Okay, first of all, you've got to, one, have a strategy that works consistently, right? So
says US officials are right.
most people that are taking evals don't know or are learning to trade. So that's something that's, and my recommendation is just to find one or two setups that you're feeling really, really comfortable with, right? So what would I recommend? Some kind of a look below fail, look above fail, a double top, double bottom. What are the easy ones? Something you can really easily define, something you can visually just say, right, okay, I'm going to be looking at this only. I'm going to be able to sort of quantify whether or not it's working, when it's working, what the environment is working. And I'll try to sort of define very, very strict rules. If you're not very good at discretionary trading, which we're all trying to be, then you really got to set yourself some really strict rules, and then you can sort of tweak those rules as and when the market environment changes. So I think the problem is a lot of people, they're looking at too many things. They're probably chasing too many things. They're looking at too many indicators. Just so you can understand is that what you're seeing in front of you, there are no indicators on here other than, well, I mean, the footprints indicator. There's VWAP on here. There's the initial balance, high, low, and that's pretty much it. There's no, I don't use indicators. Let me go on a 5-minute chart. A lot of what you actually see and all these lines and squiggles, they're just basically levels that I've marked out. Okay, and I'm not always looking at them. Sometimes I like to look at a nice clean chart like this one. It shows me. So this is my weekly. On a Monday, Tuesday, beginning of the week, I'm only looking at this. I'm really focusing on this really clean weekly chart. I'm looking to trade off that. So that's nice and clean. And then sometimes things get really noisy and I like to just focus on just something really, really clean. Okay, and you can see that here, there's just, this is nothing more than a market profile. I've got my week market profile, I've got my daily market profiles, weekly, monthly, and bigger picture profiles. But sometimes I'm just trading off something like that. And a lot of the times, a lot of my good trades, they come off a weekly or a nice clean profile chart. What your Tradify code? My Tradify code, if you use it, I'll be really grateful, and let me know, because it's at the bottom of this. There's a link in the news. If you use that, I'll be really, really grateful. Just because those guys have never seemed to acknowledge that I've ever had anyone click on my code, which is strange. We'll be interested in what your methodology for passing evals. Oh, yeah, but that's what we're talking about. So basically, keep your charts clean. Get rid of some indicators. One of the first things I did when I left the the floor with my tail between my legs. Now, I don't know if you know my story, but I was a trader trading spreads till 2018-19, and then I went to try to emulate and follow some of my friends who were on the floor at Axia, and I thought that with the skills that I had, which was a good pedigree and understanding all the macros and technicals, that I could just go and trade outright just like them and do really well out of it. And I failed. There was also lots of external pressures that I just couldn't handle at the time. And yeah, I mean, when I was at Axia and on the floor and trying to make things work, I was just looking for answers from everybody and putting them onto my chart, and then I just had these crazy charts that were just confusing me. I don't know which indicator to actually trust. And basically, when I left, I just kind of cut everything down. I went down to like the most basics, which is what I'm trying to say to you guys, is like a lot of people trying to trade have got too much. They're looking at too much. They're doing too much. So just cut things down to the most basic setup, most basic indicator, most basic system of trading, and then apply that. And yeah, I would pick a look below fail, or here's a tip. My Apex code's down below as well, guys. Here's a tip, actually. Here's something I've spoken to a few traders trying to get through their funding. So have I been trading for 20 years? No, I've been trading since I started on the 10th of the 10th, 2001. Yeah. And basically a month after 9/11. And I walked onto the floor and it was just crazy. The day after there was I remember it really well. The day after I started trading, there was a plane that hit in Texas. And everyone thought, oh my God, 9/11 again. And the markets just went crazy. And all I remember is just everybody on the floor just cleaning up, like huge sums of money. Because everyone knew exactly what the reaction function was of the market. So a month later, first day or two off on the floor, and then there was this little tiny Cessna that just hit a building in Texas, and yeah, I think it was that one anyway. Okay, so I want to just show you, because there seems to be a few people trying to pass Apex accounts or whatever it is. Let's have a look at some really simple things to look at. Since I'm not trading. Okay, hey, let's have a look at a trade that I took today. So when I was at Conversion, I was helping a trader, I don't know if he's here, he's one of the administrators at Conversion. I won't mention names. Anyway, so one thing I said to him was, look, mate, just got to like really tighten up what you're looking at and what you're trading. So just pick one setup. And I said to him, well, for the product you're trading, I think a spike retest is a really good setup. So oh, if you click on it, it just if you click on it, it will just take you. The link already has my code.
Brings us now to 5 minutes away from the top of the hour.
Anyway, so so I said to him, look, mate, just gotta like focus on the sort of really simple, right? Don't look to make huge amounts of money. Focus on your risk. Focus on what you can control, which is taking these really simple small setups. So, by the way, this is all trade at your own risk, right? So I'm not telling you to go and do this. I'm just telling you just to, you know, this is just maybe some simple trading tips. So what I just said, look at really simple setups, double tops, double bottoms, look below fails, look above fails. What else did I say? Spike retest. These are all like, but just pick one. Don't pick them all. Just pick one, right? Pick one. Get good at one. If I was having a trading desk full of new guys, I would get them all doing circuits. I would get them doing 1 month of look below fails, 1 month of look above fails, 1 month of spike retests, 1 month of. Do you see what I mean? I'm just trying to get you to become experts at one thing and not fucking up everything. So that's what I would recommend. So just given this, looking at this market now, this is just crude today. What can we look from it? We can look, this is a horizontal. So you can look at the horizontal as double bottom, double tops. There's also, so a double bottom. I don't have a, can you guys see my mouse? Can you see? Yeah, you can see my mouse. Okay, so this is a good example of a double bottom. There's the bottom from, what's it called? So this is a double bottom and a look below fail, right? Pretty much, I guess it's a contradiction because a look below fail doesn't imply it's a double top because it's gone through. But use those two terms kind of with a pinch of salt, interchangeably. Double bottoms, double tops. Look above fails, look below fails. They just imply the auction fails at a certain level on a horizontal. Sometimes it might spike through, sometimes it might just, come up short. But the key thing is here is that you can define your risk in a very tight spot, right? The prior low, the prior high, the spike high, the spike low. You can define your risk really, really cleanly. So this is crude. I'm just looking at this, and there's a prior low. That's the daily low from Monday, and then we come into yesterday, and we just look below by 5-6 ticks. So you can put 5-6 ticks on that risk, and then where does it come up to? It comes in to take, get long in this area. There's your low. I wish I could zigzag draw on this thing, but I can't. Does this make sense to you guys? So there's your prior low. Your prior low from crude is around 28, and then it comes in, touches down into trading 24s, a little bit lower into 20s, so 8 points worth of risk, and then it goes all the way back up into 60s. So you've got a potential, what is it, 20, let's say 25s up to 55, 60, something like that. So if you're putting 10 ticks worth of risk, you're getting along 25, 26, 27, 28 or something like that. You're looking at 30 ticks worth of risk. So that's a 3-to-1. Not the best one, but I'm just picking trades off at random chart here. So here's another example. There's a spike high. There's the spike retest. Comes into the tail of that high. That is a rejection candle, strong rejection. We've got on good volume. Market comes back up to retest that area, and then you're selling 68s down into into the POC, which is around 20s. So you're getting good 40-50 ticks. These are like scalpy trades, quick, but the fact is that you know where to define your risk. Does that make sense, people? But these are just simple setups. These double high, double tops, double bottoms, look below fails. This is probably 80% of my trading. This is 80% of my trading. Sometimes you get lucky as well. Put one of those trades on, get your risk off. The key thing to look for continuation is always going to be volume. Okay, when you see volume, increasing, you're onto a winner, potentially. When you see volume, there's no interest in what you've got on, so you want to be getting out of that. Okay, those are just a few simple ideas for passing your evals. Just make sure you trade something pretty simple.
98.0 confidence. It is 87.1 expected.
Look, the key thing to trading, full stop, is making everything simple. I have maybe 12, 15 setups I trade, but each one of them is super simple. And most of those are actually they're all similar. An auction fail ahead of a level or a spike through. Very similar, very similar. But basically, being able to understand and read the order flow that happens at those extremes determines whether or not it's just weak buying, exhaustion, or again, it could spike through and come back through. That's an exhaustion tail as well. But being able to read the order flow just helps me a little bit more than most. Order flow is really, really important to how I trade and how most big traders trade. Okay, let's have a look at some. We mentioned double tops, double bottoms. They're really self-explanatory. Double tops, double bottoms that have formed on high volume. That is a really, really important piece of info, right? Just, look at this one here. Nice high volume. Rejection tail at the top. Let's have a look at what happens when we retest that area. So what is it? 64s. Oh, we don't retest it. This is, I think, most recent highs. I think we're not going to retest that. Okay, fine, forget that. But you know what I mean. Okay, here we go. Oh, here's an example of where it doesn't work. So there's a spike retest. There's a spike, and we just blast through it. That's probably something that news. Okay, remember, when you're looking at a chart, you don't know what actually happened at that time. It's not always technical. Sometimes there's news. So you've got to, it helps if you watch things in real time. Watch things in real time, because a lot of people, they just go look back at the charts, they look at stats, but stats don't tell you what actually happened at that time. And there's a lot of news flowing around at the moment. So yeah, when you're doing your back testing, it's definitely not as good as looking at stuff in real time and trading in real time on an Apex account, or actually trading off on a demo in real time. Okay. Let's have a look. Here's another. That's a crazy open. Oh, I remember this. Can't remember what happened actually. I've got a really poor memory, which I don't know. Somebody says it helps with trading, but I have a really poor memory. I don't remember what I traded yesterday. I might remember if it was a big trade, big loss, big loser, but I don't remember what I traded. Look, examples of double bottoms, double tops. Double bottoms tested with low volume. So we've got like a low, we've got a low here formed, high volume, and then it comes back to test it on low volume. I'm always looking to counter and fade that trade. It can be a double top as well. Again, look, this is a double top at the top here. It's done on low volume. Potentially, you can take that reversal trade back down again. So double tops, double bottoms, I want to see low volume most of the time. Or I want to see a spike through on high volume, which is stops going off, and then it come back through. That's another thing. Hopefully I'm not going too quickly. What are other kind of trades that you can look at if you're looking to pass? Again, fixate on one or two setups. There's a friend of mine on Twitter. She's friends with Rashki, and she only trades double tops, double bottoms. And she's working with big hedge funds. All she trades is double tops, double bottoms. Every time I trade a double top, I always post on Twitter, or I sometimes post on Twitter and say, I'm thinking of you, because she's the one that kind of opened my eyes to that trade. Oh yeah, and the guy who says, have you been trading for 20 years? Just look at my hair. All right, any other questions, guys? Otherwise, I'm going to call it a day. I'm going to go and carry on with my prep. Do you guys think doing a little series on how to pass trading evals is going to be useful? I thought that might be interesting at some point. For those of you that think you've got something and you're not too far away, I would definitely move away to at least I've got my hair, yeah. My 9-year-old tells me I should dye it back black. Bogdan, I'll post another link. I'll post it on Twitter, if that's okay for you. If you do use that, let me know, and I'll do you a favor. Dodger fan, my order flow webinar was at CT. To be honest, CT I wasn't great. Whatever I did at CT, I never really felt comfortable with it. I was just getting used to the camera and dealing with public facing speaking. I don't think I did my best on order flow trading. I'd love to do a lot more. It's really an area that I'm very passionate about because it's so important to trading, and I think a lot of retail traders don't pay it enough attention. You don't need to look at ladders. You don't need to look at footprints. You can just look at candles, right? 1 minute, 30-second candles to look at order flow. But you need to create a narrative around what's going on with the participants in the market at any given time. The most accurate is looking at the footprint, is looking at the ladder. Next best is your footprints. But you can just use, I know that, I'm familiar with all these terms. It's taken me years to get comfortable with ladders and not ladders. Ladders I've always been good at. It's really taken years to get good with footprints because it can be contradictory. But you can just use 30-second candles. I think the ICT guys, the trading the machine bullshit. I think they just use candles, but yeah, you can. Yeah, okay. All right, I'm old. But it's sad for me because, it's never been easier to access trading. It's never been easy for people to trade and access a trading environment, have good tools. Like Sierra cost me $30 a month or whatever. It's peanuts. The data costs peanuts, nothing. And yet, I think the failure rates are higher than ever with trading. Even on the floor, it's not that easy. Not seeing... When I started, it was a lot easier for people to make the steps. It was, the markets were a lot easier as well. But there's so much information out there, and I think there's just information overload. People are just looking at a million different things at the same time, and they need to fixate on one or two things. And I've always said, find somebody you really, you fall in line with. Oof, spread trading. That is a lifetime away. But I do still trade spreads. I think I've said that before. I still trade spreads sporadically. One of the times where I'm going to probably trade spreads this week is going to be tomorrow after the Nvidia. I will trade spreads after the Nvidia auction. I will try to spread things up, and I'll try to hold overnight using a spread. So I still use spreads. I still look at spreads, things like copper gold, copper silver, things that people don't really think about. Russell versus ES. Sometimes I'll end up with a spread. I'll be short ES and long Russell. I do, but I don't really trade spreads per se. Yeah, trading is 90%, 95% mental, 100% there. What was it like at Axia? How does the floor structure work there? My time at Axia was... I talk about this a little bit, I don't mind. Tomorrow I'm doing a big talk with Bogdan from Axia. We're going to be talking on a few topics. We're going to do spaces on Twitter, so join us for that. But I'll go through my time at Axia because it's somewhere where I'd like to go back to, actually. I've spoken recently about how I really appreciate the time I had on the floor. The time when I was there, I wasn't ready for it. I was a desperate human being at the time. I was somebody who was trying to make the transition from trading spreads to trading outrights. I put a lot of money into it, a lot of effort. I wasn't getting the payout. My ego wouldn't allow me to fail. I think Axia was probably not the right time. I wasn't the right frame of mind to be at Axia, probably. I was surrounded by friends of mine who were making good money, and I think that put a lot of pressure on me, and I found my feet again once I left Axia, simplified things, did things my own way, because when I was at Axia, I was looking for answers from everybody else, all my friends. You're making money, just tell me what to do. I was looking for the answer. I was looking for the, how do I get to that goal as quickly as possible, instead of actually trying to develop my own process, which is something that I did after I left Axia. And thank God I had a patient wife to allow me to do that, because it was pretty hairy at some point. I mean, I never lost money. I mean, I really didn't lose money trading, but I wasn't making it. And when you've got family and you've got kids in school and all that kind of stuff, it can get hairy. But Axia, if you're a young guy, if you're open to learning, if you're not outcome orientated and you're process orientated, if you're willing to open your heart and eyes to, you know, what are the possibilities with trading, it's incredible. I mean, I learned so much there. Everything, everything that a lot of the stuff that I've kind of narrowed down and improved on, things that I've learned from outright traders at Axia, and then sprinkled it in with my own kind of personality, the way I like to look and read markets, and then I've got my own process. But if you're going there looking for answers, if you think you're going to go to Axia or watch a video or watch a course or any outfit, and you're looking for, I'm going to go and do this course and I'm going to go meet XYZ trader and then I'm going to be a profitable trader. No, guys, let me tell you from me, I was mentored by one of the top traders at Axia. They're in the book. He's a good friend of mine, and that's an Amazon delivery, and I can't bother to go and get it. I'll finish what I'm saying. But I was mentored by one of the top guys at Axia, a friend of mine. I was going to meet up with a beer with him today, but he's sick. And I was just looking for answers. I was like, mate, just tell me what you do. Tell me when to sell. Tell me when to buy. Tell me. And I couldn't really develop a process around that. I was looking only for answers. I wasn't asking the right questions of myself, of what trading is, what it is to be a trader. So you've got to have the right mindset to be around those guys, or to go on a course or do anything. But I tell you one thing. Is a lot of courses out there a load of bullshit. Okay, I mean, when I say bullshit, is that you're paying money for stuff that you can just go and find openly and freely out there anyway. I'll give you a good example. No, I won't actually, because I'll probably get told off. But there's a lot of stuff out there that I don't agree with a lot of the courses out there. No, not the engineer. My mentor was the student. So I read about the student. And the student and the godfather, I was on the floor at Marrick's with, and Schneider's, which is where a lot of us started. But that we all come from a similar background. They're all spread traders as well. The engineer is somebody else. He's incredible. If any of you guys have seen my journaling, these are the things I've picked up from my time at Axia. The way I look at and extrapolate information from my journaling, a lot of it comes from how the engineer does it. A little bit how Tom, just giving away names. Not supposed to give away names. That's a bit naughty. The way that the student basically showed me how to basically break things down. The engineers are profile. They're all the guys at Axia are profile traders, with the exception of the Warrior. Warrior is just something else. He's crazy. Not crazy, but he's just like, you can't figure out how he works. He has a 3D image of the market across all markets without needing a profile or anything. If you've seen any of his videos where he makes millions, they're real. Would I do a session on my journaling? Yeah, I think it's something that's really neglected. I think it's really, really neglected. I'll make a note of that. Where's my goddamn kids are stealing all my pens off my desk. So, right, we'll make a note for journaling. Hi mate, I'm 24 years old in a prop shop currently. I'm a junior trader sitting with a bunch of experienced guys. Good for you. Any advice? Things? Just open your mind. Open your mind. And I mean, I can't advise you. You're surrounded by guys who are supposed to be advising you. I don't know what they're doing, how you're doing it, but I would just be open to learning. I wouldn't really try to copy too much. Initially I would be copying, but I would be open to the ideas of expressing my own views on how things should be carried out. And if they work, then great, go for it. But try to learn as much you can from these people.
we have posted out this.
Yeah, if they're experienced traders. Which outfit is it? Are you allowed to say or not? Is it in London or who's this? 1997. I started my career FX dealer in the bank in 1997. I'm older than you. Ah, do you have your hair? Or you gone grey? Look, a lot of bank traders I know never made the transition to prop trading. They just didn't have that. They were all Billy Big Bollocks when it came to it, and they weren't humble enough to realise when they were wrong. But a few, yeah, I have to be honest. I'll say that all the big bank traders never managed to make it actually. Anyway, so tomorrow we've got that Spaces with Bogdan from Axia. Actually, I think we're going to open up on Twitter if anyone wants to post some questions for us. I think one of the key things that we always talk about is, and I've definitely seen it, is the difference between real prop and retail, and there's a huge disparity, just huge. What you guys are fed is just completely. It's not so much the tools or the markets; it's the application. It's like what you deem as possible. You know, I don't think you know, when I was at conversion, the idea of making $1,000 a day or $2,000 a day is you know, it was like magical. The idea that you can trade news, or you can trade a headline, or you can trade NFP. I think I did a webinar on trading NFP when I was at conversion. It to me just seems stupid that you got this, you know, these 100 tick ranges and you're just going to sit it out and let it, you know, or I'm not going to trade the open, or there's so much 4-par bullshit out there that we're not supposed to be doing. You can't do this, you can't do that. Yeah, prop traders don't think like that. They look for the big candles. What made that big candle? How can I get on that big candle? Where is it? Where's liquidity? How would you slice a 20k a day stop? How would you slice a 20k stop at a prop firm with a 20 top limit in ES? Well, I'll try not to hit 20k stop. 20 lots on ES. You shouldn't be. That's a lot of. If I had 20 lots, I'd be waiting for my big moment. I wouldn't be trading too much with that, or I'll be scalping away. How would you slice a 20k a day stop at a prop firm? If you're a prop firm with a 20k stop, then you don't need any information from me or any guidance from me. You're doing pretty well, mate, because they don't give 20k stops with 20 lots to anybody. Can you trade multiple products at once? Yeah, I trade loads, and people don't understand that. As in, comment comes out and I've got 4 things on at the same time. Sunday reopen, I was long ES, long ES and short gold on the Trump comments. You know, it's quite normal. Well, I was trying to go short ES, I only got very little on. Missed my entry. Can you handle? Can you trade multiple? Yeah. Correlations are massive. I speak about correlations all the time. That is why I've got ladders. Being short, long, multiple products, understanding how those correlations work. Super important. Super important for me. Super important for most prop traders I know. A lot of prop traders will probably have maybe half the ladders I've got. I've just got used to looking at multiple ladders because I've been trading spreads. So do you profile analysis across all of them? Yes, actually, yes. I am aware of the positioning in most of the markets I've got in front of me right now. Yeah. Yes. And profile analysis is something that's very easy to me. I just need to look at the shapes. So it's really simple. So let me just give you an example. So this is the yes. This is something I really post about a lot on Twitter. Where is it? I've just lost my... Yeah, there it is. I'll give you an example. Here is the yes. See all these fancy lines? That's just for show. Well, it's not for show. It's the product I trade most, and I've got the levels up there. But but the most important thing is the profiles. I'm going to show you now another product. Let's have a look at Crude. You can see I've got a lot less lines on there. Let's have a look at. So I'll do my analysis the same way I do my analysis for ES, but I don't have time or the capability to put, you know, years open lows and this, that, the other. I mean, it's a lot less detailed, and a lot of what I want to know is the positioning. So I can see here that basically we've, you know, what's gold done? It's basically come up, hit a brick wall, and come back down again. Most recent price action has been to the downside. So if there's a bullish comment on this gold, you know, that I think that, you know, should lift gold, I know that I'm trading against this positioning. I know where the most, you know, we just had a little look below fail. That's potential reversal to the upside from the bottom of balance. Whereas balance is basically, there's the high, there's the low. We'll basically be going up, down, up, down, up, down. We'll just come out onto the bottom of that balance. You know, my analysis is really, you know, I'm pretty quick to look at something and just make my decisions on it. And then the rest of the time, it's just looking at the lines. If there's a line on my chart, I trade it most of the time. Well, not every time, but I can look at all my charts. It's like, I've got gold, I've got everything you see here. I've got an 8K screen here and another one over here, another couple of screens here, and I've basically got it all up there. I've got all the profiles, and if I need to make them big and zoom in, I will. But all I need to know is the most recent price action, the high time frame stuff, and that's it. And I also got the 5-minute charts on everything, and these are the things that kind of alert me. You know, if the ladder goes off the scale and I just see it big blip off the screen, I'm looking at the 5-minute and I'm looking at the ladders and the profiles. So I do have charts for everything that I'm trading in front of me, or most of it. Some of it's just for correlations, like I don't trade natural gas. This is this is gasoline. I don't trade that, but I use it to trade oil. That's just my, you know, history of trading spreads, and I know that those things quite correlate most of the time. Do I have a process for execution? Yes, I do, and that's important. Do you profile across all markets? Yeah, did that one. Of the markets you are having your screen, how many would you actively trade versus having them there for reference in other markets? Okay, I would trade ES, NQ, and Russell. NQ is one extreme, Russell is another extreme. So you've got the technology, and then you've got like the, you know, Main Street. ES is somewhere in the middle most of the time. And you can see that sometimes when we're in balance, you'll see that NQ's going up, Russell's going down, and the ES doesn't know what it's doing. So those are good cues. I look at the YM as well. That's a good flight to safety, actually. A lot of time when you see big sell-offs, you want to put a spread on where YM will hold up a lot more because it's a lot more international. You've got a lot more international, you know, not international, but you know, things like, you know, Coca-Cola, McDonald's are in there. I don't trade it at all, to be honest. I don't trade it at all, but I've got it up there just for the sake of it. I've got my gasoline, but I only trade oil. I've got my copper and I've got gold, but I trade both of those, and sometimes those can go like that, different directions. I've got all my currencies at the bottom, and I've got more that I can pull up as well. At the top, I've got my main bond markets. I've got my 30-year. This is the UB, 50-year, whatever it is. 30-year. I've got my 10-year, 2-year, and 5-year. So, yeah, I will trade all these bonds, all the bonds. So there's only a few products I don't trade. Do I have a process for execution? Yeah. So it depends on the market, depends on the setup. No, it doesn't depend on the market. Execution is pretty much the same. Depends on the setup. So, for example, a scene of the crime trade. So a scene of crime trade is basically you get a blip and it comes back to that reference where that blip happened. And how do I execute that trade there? It's pretty patient. I'm waiting for it to come back to the, or near-ish. I'm looking at the order flow, seeing how the ladder's trading in that, you know, really, yeah. So basically, seeing the crime, it blips in one direction, and then the market starts trying to come back. And I'm just seeing how easy it is for it to come back. And does it go below or above? No agriculture, no although it's good. I used to trade it a lot. So that's a good example of seeing the crime trade where I'm quite patient, waiting for it to come back, and sometimes I might even just, put 1 order, 2 order, 3 orders around an area and look to get filled. My stop will be at the bottom of the prior candle or something like that. So there's a sort of way that I'll trade that. Yeah, that one. What else is there? An open drive. Open drive is just literally just hit and lifting off the open. There's got to be a good reason for that. That's crazy sometimes. What other kind of execution? Spike retests. So spike retests is a little bit like the opposite of seeing the crime trade. So the spike, you got the spike, you see an exhaustion tail at the top, and basically you've got a tail where basically you've got a tapered top, and you're just seeing how far buyers or sellers can get up that ladder. Which the ladder is on your footprint. It'll look like the tapering of the footprint, and you just want to see how hard it is for the auction to get up there. And there's a little few tricks that you can do on those ladders, not on those ladders, on those footprints. Your little kind of, I'm not going to give it away, but there's a few tricks you can, I'm not going to not give it away, but I'm not going to, sacrilegious to me, give you 5-minute ideas in your heads and stuff without running through things properly. But basically there's a few little areas you want to look at on your ladders to get really, really incredibly accurate access to trades. But there are a lot of tricks. There's lots of different ways I execute a trade. Sometimes it's all in. Sometimes you find a little a zipper or stalk zone, Convergent would call it, whatever it is, a little zipper. Never heard of that, but a stalk zone, basically an absorption or an absorption zone or something like that, or resistance. Sometimes you get like this kind of block where it's just going up and down, up and down, up and down. In those areas there, I'll be looking to scalp. I'll be looking to execute at the high or the low, and then looking to exit some if it's not going. Because sometimes it takes time for the tea to brew.
Although it's usually about 30 seconds late.
Any other questions? Execution, there's a whole, spend weeks talking about executions. That's why this trading is not easy. Actually, I recently said to somebody that if you don't have the execution skills, just stick to trading on a line. Be disciplined. By being able to read small consolidation, yeah.
10 seconds.
I'll try and find an example. NASDAQ has these a lot. NASDAQ gets these a lot. Look. So areas that I like to scalp in and out, in and out, in and out is like seeing something like this. This little block here. This little block here. Like if I get short there, where are my arrows pointing? If I get short there, I'm not stupid enough to think that this is going to go hit the floor. I'm gonna look for exits at the bottom of this little range. I'm gonna just trade the little range, and it could be a big range or it could be a small range. It can be areas where I just execute on a line, which I just said. Things like VWAP. I'm looking to trade pretty much on the VWAP, around the VWAP, but very, 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 very close to that VWAP. IB low, IB high retests. I'll be looking to trade that, not on the line, but around that line. Sometimes it's really clean, a bit like a VWAP. And it also depends on how that IB high and IB low was formed.
No sign of the Dallas Fed manufacturing business numbers.
God, my PC's gone a bit spazzo. Toughest part of your career and how did you overcome it? The end. The bit where I stopped spread trading and basically decided to become an outright trader. I had this, history of providing for my family. I had this ego that made money for quite some time, and I wanted to make this transition to outright trading. I thought I was smarter than some of the people that had made the transition, which is quite arrogant in itself. And when things start to not go wrong, I just really struggled with the ego. Ego was the biggest thing I struggled with, because I was this big trader or whatever, or experienced trader, and my ego just got the better of me, and pretty much didn't allow me to. Although superficially, I probably exposed myself as somebody who was looking to learn process and do the right things, and this and that. When it came down to it, I was just chasing the money and the feeling that I couldn't make money where some of my colleagues could. That was, I learned a lot about myself, actually. Toughest part of my career was learning about myself, because when I was young and I mean, the simple answer would be like the toughest part of my career was when I lost €1 million, 1.2 million euros. I lost it in. The date is actually on the inside of my ring. Okay, it was a week before I met my wife. I lost 1.1 something million euros, but I just knew I could overcome it. You know, I had this. I had no kids. I had no fear. I knew I could make money. Within 3 or 4 months, I'd made that money back, and I finished the year up. 6 figures, high 6 figures, very high 6 figures. So basically, it was easy for me then. Like losing money was fine, but when when you got your kids and you got basically the slow decline and the ego, and knowing what I used to be as a big trader or whatever, and seeing that decline and self-loathing eventually, and dealing with myself was the hardest thing. Overcoming financial losses when I was younger was easy, no problem at all. In fact, I didn't have that many. That was just the one isolating. That was the one. Trading outrights. Trading outrights brought out the worst of my personality and desperation. Trading spreads. I could teach you guys how to trade spreads, and you could probably go away and then spend the next month not taking a loss, just because the way spread trading works. You're just martingaling it, and by definition, a spread should hold, come back. So you're looking to fade the edges. You're fading the edges. You're fading the edges. It's coming back. It's coming back. It's coming back. And then even if you don't have the skills, you could probably do okay. When the shit hits the fan and markets blow up, then that's when you cut your mustard. So what changed in your trading between losing the million and then being up 4 months later? What changed in your trading? Well, the loss was basically a stop. I couldn't do anything about it. I was short 1,200 contracts in a market that just stopped up 100 points. And then I completely cocked up when the market white boxed, and then I did something stupid, lost even more money. So there was nothing really I could do about taking that loss. I just had to deal with it. I went to bed that night crying and speaking, phoning my dad up at 3 o'clock in the morning, go, Dad, it's all over. But when I came back the next day or the next few days after taking that loss, there was a determination and an aggression to my trading. Talk about trading in the flow, and I've had that. I'd say now I mostly trade in the flow most days, because I'm professional. That's why I'm not trading today, because I know I won't be I'm knackered. But I had determination to get that money back. I had the ability to get that money back. I had the funds to get that money back. I had the people around me, supporting me to get that money back. It was easy. It wasn't hard at all to get that money back. I think I made back a quarter of a mil, like within a couple of days. Yeah, it's not hard. Any other questions? I'll go also, toughest part of your career and stuff. People make excuses, when things started going, spread trading was great, but then when the volatility died down, there wasn't very much money to be had. It was very hard. It was like getting blood out of a stone. And I think in the book, who is it? The Godfather talks about, it was getting harder and harder to make the same money. And I just had my second child, and you've got these responsibilities. Also, you got married. Someone married you, and you get married, and they expect certain lifestyle and all that kind of stuff. Being where I was, it was always, you could always maintain that, but you knew that basically you were living on the line. If things went wrong, you could quite easily lose that lifestyle. And when you got kids, it's very easy to start making excuses as to why you don't want to take risks, why you don't want to do that. There's a lot of, especially trading spreads, because with spreads, your potential losses are limitless. I mean, really can be very scary trading spreads. When you're younger, you can take those crazy losses. You can go to bed, wake up, you're a short 100, or I'll give an example, short 100 gold contracts, and risk brokers phoning up to say, "Ooh, do you see what's happened in Turkey? There's been a coup," and then gold's spiked up 100 ticks or more. You could handle that, right? But when you've got kids, and when you've got family, and you've got external pressures, it's hard to be a spread trader. And that's one of the reasons why I went to outright trading. Because even though outright trading is really hard to actually get good at, when you get good at, you put your trade on, you put your risk on, and that's it. You go sleep, and you know what your losses are. With spread trading, you never really knew where your losses are, and that's why I made the transition. And people ask me, why don't you go back to trading spreads? And that's because I never want to deal with that ever again. Not as a father, not as a man with grey hair. I like to put my trade on, know I'm going to lose, 10 ticks, and if it goes well, I'm going to make 30 ticks or 50 ticks, 100 ticks. Today I was long pretty much double O's in oil. I got lucky with the comment, thank you very much, 40, 50 ticks, and that was like 5 tick risk. If I put spread on, let's just say hypothetically I put ES Russell spread on, then I've done this recently where it can the spread widens. It's like having two outrights, and you really shouldn't take them off. You need to keep adding to it, because you've got to believe that spread always comes back. Unless something fundamentally has changed, then that spread should always come back. But it doesn't always come back. But there's little tricks you can do with your averaging and the way you trade it to kind of contemplate that. But I don't ever get back into that. It gives me nightmares. The idea of spread trading and having limitless risk it's like being a market maker for what's it called? Options. Guys, really enjoyed these questions. I've done this for a while. It's not easy, and the transition to outrights was difficult. And if I was in the best environment to make that transition, and I didn't quite make it. But I did learn a lot, and it took for me to walk away and then find my own way. And to be honest, what's it called? Things like funded accounts helped me a lot, because I could trust myself to have a go with a funded account. So there are benefits to those things. But the key thing is just to set yourself small goals, keep it really, really simple. Trading should be simple, and then just keep adding things. Keep adding simple setups, simple things, and keep learning from the way the market moves every day. And that's why journaling is so important. So we've got to do some journaling. Webinars, how to journal, something I talk about all the time. Okay, no more questions. I'm going to, what's the time? Son's coming home from school in 40 minutes. I'm probably going to help him with his maths homework. Thanks for the questions. Keep at it. Trading it's simple, but you make it hard on yourselves. And same as me. You just got to create yourself little simple rules that you can just play by. You've got to try and make things as binary as possible trading, and you'll get there. All right. Okay. How do we turn this off? That's okay. My pleasure, guys. Right. Don't know how to turn this off.